Okay, good evening, everyone. So, yeah, this will be a normal rant with a lot of alphas, like a lot of trading things, which might be helpful to change the way how you look at the market. I have covered them in like much more structured way, but like a lot of people have problem with collecting data and stuff. It's like 3 years back when the thing I'm about to share, like I found this thing about 3 years back. This changed the whole way of how I trade. Like it's a combination of like market structure and displacement theory. I have a detailed like video on displacement theory. So like how do you approach or how do you set a bias? You see, most of the time is like the daily candle or higher time frame is what I use to set like a bias or something. Like yesterday's shorts or something, like whichever. Like let's take a random example. Then I will discuss the trades I took. You see, every time there's a strong wick or like this bullish candle, there's a huge wick. It's showing failed displacement, which shows like next day will be bullish. Okay, it went opened with a gap up, and then same thing. It was a huge wick, and then again, and here next day you would have like shorted and made a lot of money on the shorts. Eventually it closed bullish. That's a different story. That's intraday stuff. But like, how do you start a day with a bias? Again, over here, it's like a uncertain candle because like almost equal size wicks. So here where there's where like volume and all that stuff comes in, like who was more dominating, who came in towards the end of the day and all that stuff. So again, a wick over here, close bearish. Next day, same idea, bearish continuation. Again, same thing. And this was first day of the new contract. So it's like whenever you see there's a new contract or let me show you on BTC. This was like first day of new month. So like there's a lot of rebalancing with algos and stuff. So like there's a way to figure out that, but that won't be able in this video because it's like sort of a gamble thing. So you can capitalize on the volatility by betting on both sides, but it's not always, but you have to look in the volume thing to understand it much better. So that's how I trade this one, like huge gap ups or new contracts thing. So I think here it was another new contract. So yeah, you can see there's a huge gap up too. So if you get historic data, you will see like there's a huge gap up, a huge gap down. So that's one way of trading this. But like you need a lot of volume things to understand or like make like capitalize on it. It's still a gamble because you're just betting on volatility. So I call them gamble plays because it's like hard to bet, like hard to get the bias right, but you can always capture on the volatility. More on volume stuff later. Okay, let's stick to the like same swing failure pattern. You have a bearish bias. You have a swing failure pattern of along with wick bearish pattern. So next 2 days, like this whole moved. I captured this, like I shorted over here, and like let it run. And this was my target. Like tomorrow close. Like yesterday, I posted this. So today, by today's close, I was expecting this. So shorted over here. This huge failure pattern. Captured this. So like I shared over here, like once I got the bias right, so it was like one directional play for me. So yes, I didn't trade this one, but I took one trade and that was it. Because like probabilities. So I know where price will be and then the market structure or the high time frame candle is reciprocating it. So there are other things on like market profile, this huge inefficiency. It is to be tapped in the 5 days. So like first, second, third, fourth. So it tapped into this. So this was my initial plan from the market profile. So the idea of the whole trading is like getting in more and more odds in the favor. So what's the right way or the perfect way? There's actually no right way and the perfect way. You just have to come in with the mindset of probabilities. Like if any trade can go wrong, you will have to make sure you survive such days and such trades. And the next thing is getting more and more odds and favors. Like this is a higher time frame, then market profile is supporting it. Then you can do some volume analysis or like option or OI. So it- the idea is like getting odds in favor. The thing which I realized 3 years back was this thing, higher time frame and then trading it on low time frame. Like this current trade, it was 4 hours candle, like very high time frame. It's on 4 hours. You can see over here. So this is a strong swing failure pattern, and like it's showing a bullishness, right? So the next candle is most likely to be a bullish one, as it's a New York session, and that's where the volatility is. So I don't trade other sessions, only New York, because there's volatility. You can take out the average volatility and you will figure it out. So the idea was like 4 hours candle is bullish and there was strong rejection. So you can do dive into deep and figure out like what type of auction happened over here. That's another story. But just by looking at the structure, you can say it's a bullish one. So idea was like wait for break of structure, or like wait for like 15 minutes swing failure pattern would have entered over here, or like 30 minutes over here. Anything was possible, but I waited like I am on a 5 minute time frame. So I'm using the reference of break of structure. Like this is a whole move. As soon as it moved above, I entered and it's going on. So like overall I have a bullish bias. Like this was a whole flush, so it's like the Dalai Lama pattern, and I'm expecting it to reach here because this was a huge flush and we are slowly grinding up to this place. So we might just pull back and go up there, I don't know. But like as of now, this one. Okay, the another trade I took yesterday, it was small scalp. Uh, because I am not trading on my regular funded account. It's just personal accounts. So like this 4 hour candle, you can see like this is CRT and then this is another CRT. So this is like bearish, like price tried to move up this huge wick and it's close below. So it's showing a very huge selling bias over here on a 4 hours chart. So the next 4 hours I can be bearish. So the idea I took and like waited for the swing failure pattern. It was like a sweep of all this and then tapped into this uh, normal like regular chop over here, a lot of liquidity. There was like strong absorption of like over 120 million. So it like all were queuing for me to go short and I went there. So the idea is like I took a reference from higher time frame. I tried to add more and more bias or like more and more things in my favor that yeah, it's high time frame like with volume profile and like footprint. So yeah, so those are just to add reference, but the main key like how to be profitable is a bias, then having an entry model. It's as simple as that. You just have to get odds in favor. You can use VWAP. I personally use only rolling VWAP, and there's are like momentum based indicators. So it's like I have a few. These are a few dots. Like if I am bearish, only trade if like if this gets reddish. Like I have a bearish bias, so I will ignore the green ones and I will only trade the red ones. Likewise over here, same thing. Like I skipped it, and same thing. This is another momentum based um, indicator which shows like I have a bearish bias. Unless it shows something bearish, I would ignore it. So it's like enter over here, I have a bearish bias and I let it run. So likewise, same thing, even today, same stuff happened. From morning, it was showing bearish, the dots one, and even this indicator. So on lower time frame, even if you having one huge candle on a higher time frame, let me show you what I'm talking about. Like you have this huge bearish candle over here. It's a normal bearish candle. But if we move to 30-second or 1 minute candle, it could be a trend. So what you are trying to do is like get a bias from higher time frame, and then on a lower time frame, you are trying to capture the momentum or trade. Like every huge move on a higher time frame is a trend on a low time frame. If one is new to market, who just relies on market structure, you could have just entered on this break of structure because like price is chopping and like price has broken the structure, the last open of the bullish candle. You could have entered here or here and stop loss right above this. So like there are ways even over here if you are bullish and just bought it and like sell it, like having a bias will like help you ignore all the bullish setups. You are just trying to trade the bearish setups. Are you gonna make money? No, but you surely gonna survive a lot of bad trades. Because if you like this was also a bearish sentiment because this was a huge wick and then it was a bearish one. So you would have just even if you just followed the indicator, you would have like just captured this whole move or like then chopped out over here, but you would have ignored this small moves upside and like this stuff, or like you would have just used break of structure or like add a VWAP or something at the start of the day. Let me just turn on the settings, band 1, band 2. So you can have just trade it over here in this range. It's above regular VWAP. So again, like if you're just looking to sell over here, and that's it. Having a bias is very important. Like many people complicate it, but all you need is a market profile and some basic knowledge of candlesticks, and you are like doing a lot better. The other thing is the psychological thing. That's something I can't teach. That's very personal, because like we all come from different places and have different expectations. So that is the psychology things, not much. So even today, like short over here, a rejection at VWAP, and then look for short again, some rejection over here on 5 minutes might be, and then look for shorts again. So that's the idea. Like getting the bias right is the whole idea of whatever you want to be doing. So same thing, even I was bearish like for the whole Friday, Monday, Tuesday. Because like we have expanded a lot, and Nifty is a mean reverting market. So expanded too much, and now the next thing is bearishness. Even now, like we have been falling for 2 days consecutive, maybe a sweep below this, and then we will be flying higher. So that's the whole idea. Is like the whole narrative when it changes, it's gonna wreck a lot of people. So, but you are trying to capitalize on like bias and then whatever you want to do. So all you need is a bias from a higher time frame, basic understanding of like market profile or like even candlestick. So like I have a bullish bias over here, so I will be targeting like weekend low, or it could be anything, or the Dalai Lama, the whole thing. I'm just looking for a reaction around this region, because like this like whole order block, you can consider that. So a lot of liquidity pending over here. So idea is the same thing. So just if there's another wick, I will close it out. If there's another break of structure or market structure break, whatever you want to call it, I will take a partial, and rest I will let it run, because like there's still 1 hour for it, and maybe in the last 30 minutes it will form the upper wick. The idea is like you have to figure out, like if you are trading on a 4 hours market or like 4 hour candle, how much time it takes to form a wick, how much time it does it take, or what time it makes the first wick and the second wick. I only look for short if I have a bearish bias. I only look to enter short opportunity before like 11:15. After 11:15, there's a very low probability it will reverse the whole day. Even this trade I took openly, I like bought 10 rupee premium and sold near about 150, 155 something. Idea was like I will be only looking for longs before like 11:15. So this was my last long, and I held it all day. Because like yeah, we were falling all day and we have to recover it. So idea is simple. Whenever there's a fast move, there's full recovery. So likewise, same thing. Fast move, full recovery. Fast move, full recovery. So here, like yeah, we were like started moving up over here. So I was sort of bearish over here. But the thing is, like we didn't come along, and next day it was complete pure bullishness. And when it shows some bearish signs, I was completely like this whole move has to be retraced. That was the idea. And likewise, fast up move, full recovery. So that's the whole idea of it. Give me a minute. So the whole idea is like whenever there's a fast move, the market usually try to mean revert as it's an index. So you have to think about like it's like you are climbing upstairs, and uh, it's like if you are an investor, you want stable returns. So stable returns from an index, that means like you don't want price to move up higher or lower at a fast pace. So idea is just mean reverting. So the basically like this was the key moment. Is like use the higher time frame and look for entry models on the lower one. It's simple maths, but like a lot of people try to overcomplicate it. Do whatever you want, fix the bias, and you are good for like 3, 4 days a week. You will have a losing day. Okay, then rest I will be covering later.